everybody. Welcome to Roots Funding's Private Investments Forum. Today we will be looking at high-quality institutional grade deals across 30 plus countries, and we're so excited to have you. On this call, we have people from across 15 time zones. Do you think we have? So I would love to hear from you. You will see us launch our funds with Fundstructuring that bans alternative investments in real estate, and we have a panel discussion with our capital partners. So stay tuned for all the good stuff.
So the goal here is to really fill the gap between public capital markets to the private capital markets. As a company, we are focused on literally everything, and we have a huge team, around 40 people as a startup around the world. And we focus on deals, high quality deals, and then anywhere from any country in the world, you could actually list properties on any of our platforms. For the right now, for the time being, we have only in Canada, but the companies are already operational, more like a VC, PE, and we are already in business all the countries.
We will be granting people their liquidity to exit and for other folks to actually enter in and pick up these secondary opportunities.
Introducing PMX, the regulated digital marketplace built in Hong Kong to fix this. On PMX, private companies, PE fund stakes, LP interest and debt instruments trade peer-to-peer with smart matching, instant price discovery, standardized due diligence, full SFC Type 1 and 4 oversight, and seamless access for global capital. We target $200 million in transaction volume in the first 2 years. Revenue from low 0.75% trading fees, premium subscriptions, and data insights. Profitable by year 2.
With the partnership with Fundstructuring from Netherlands, present distribution will be happening around the world. Alternative Strategies Fund, which is mixed for all sectors. Global Real Estate Fund, huge pipeline, as 70% of the deals we have in pipeline are actually high quality deals, anywhere from resorts to high rises to residential or commercial buildings, as well as infrastructure projects, offering 10% coupon as well as about 10 to 15% equity. So there will be quite a bit of a growth potential.
We're happy to launch this together with Roots Funding, and I think it's going to be two strategies that are exquisite, that are very interesting, especially if you look at the alternative equity, for example. That's an ROI. If you look back at 28.3%, and over the last 5 years already 230%. And this is actually based on a strategy that we're actually running. It's not like measured back, but it's a strategy that we actually have run over the last 6 years, and we want to now continue with Roots Funding. So there's actual track record there.
If we look at the private companies, everyone knows more and more companies are staying private longer, which means that if you look back 10 years ago, 2015, 2015, if you did an IPO, over 50% of the value creation is being taken place after the IPO. So publicly available for everyone. Nowadays, it's only 20%. What does this tell you? It tells you that you want to be in these private companies, but you have to find your ways in. And via this fund, we will find our ways in, not only for us, but also for you as a professional investor. Also for the real estate fund, we see with rising interest rates, there are pretty good deals out there. Happy to launch these funds, and looking forward to our joint partnership.
So thank you so much for joining us today. And I think the three of you come from different sides of the capital conversation.
And now we're a small boutique investment company. We invest from all the way from sort of early stage seed right the way up, and including sort of larger scale private equity deals as well.
I run a digital marketing agency, but we work with founders at various stages. They're look more attractive to raise capital.
A career which has always been somewhere in between investments and investors. Now I've been supporting smaller mid-market firms in their fundraising journeys. And I've always believed that the whole business of investment really starts from one point, and that is the company.
How many deals do you think you look at before you say yes?
For smaller mid-market firms, which is where we focus on, try to evaluate the investability of that company, whether it's something the market will resonate with, whether they have a good story, whether they are investable from a structural perspective. What are the investable standards? Is it institutional enough? Is it a company that is able to provide all the data that an investor would need in a structured manner? Whether it has a governance model in place.
Where you're the investor. So from a due diligence perspective, or from just a capital perspective, what is your observation about mid-market deals or mid-sized deals? What is the gap? What is the biggest gap you see in companies or founders seeking funding at this level?
We're more interested in what we would call the kind of the founder DNA as opposed to a track record, because a first-time founder doesn't have a track record. They may have been working in another business, they may have been in the industry and so on, but they don't have a track record of starting a startup and making it successful and so on. They don't have that, and certainly I didn't when I started my first company. And so we're interested in what we call that founder DNA, which is those key attributes that we feel are the things that will indicate a likelihood of success or not. What we call a profiling suite that we use to get some inside knowledge on the founders, especially sort of how they think.
Maybe from you, CK, and a lot of founders, possibly many founders on the call today as well, are looking to build that out independently through their brand, through their messaging, through their company and their brand. What do you think stands out, and what's been the secret sauce to founder-led success stories?
They want to see founders creating excitement, earning customer trust before you launch, way before you launch, because it's much easier to get behind a founder who has already built that online credibility. So the how is the channel, right? So it's B2B. The obvious answer is you want to be on LinkedIn, because that's where you reach those key decision makers, those potential buyers. B2C, then obviously it's other channels you need to look at as well.
Wonderful. And if I were, let's say, an early founder, would I need to be, I don't know, an influencer, like a social media wizard? What is maybe the one attribute that stands out as someone who's hustling, maybe building, a SaaS product, or we're building like a network? What is just like a couple of things that stand out so that, folks on the call today could maybe take that back and work on it?
Absolutely. I think to a certain extent, you have to be delusional. You will have people telling you, you can't do it. This is a silly idea. And believing in yourself, and obviously doing all the research and speaking to your future customers is very important, because you have to validate. You can't just think this is a great idea and not speak to your future customers. But as long as you've done that, you've done your homework there, you are going to have to keep pedaling for a lot longer than a lot of people will have you believe. People give up in month 3, when in month 6 you might see some traction there in terms of building their online personal brand. You have to, no matter which way you look at it, people buy from people, not logos.
I love that. People buy from people and not logos.
To founders, now that we are in the same chair as everybody else, Alex, and looking at the founders, as much as the idea, the business need is out there in the market, we also need to really pay close attention to the leadership. And as Richie is saying, there will be times when leadership has to be changed, and we look into that and looking into the companies right now, and kept going, and right now solid clientele and solid pipeline and everything going in the right direction. And so, you know what, it feels good to be here where we are, and nothing better than that, I could say.
We appreciate you taking our time and being a part of this conversation. Thank you very much.